Hello YouTube, Step Index on a daily time frame. How do you define low probability trade conditions? Well, I like to define a low probability trade condition in a consolidation market where the market is not in a hurry to go up or down. It's just in a tight range. It's like it's been held from going higher or lower. If I see that in the marketplace, then I define that as low probability. And this is what you're seeing in this display of price action. Well, these are one of the market phases where price is not allowed to go anywhere. So the type of trader who will be participating in a consolidation market has to be nimble, like very, very quick. You'd have to be a scalper for this kind of market condition. You don't want to be a swing trader in this market condition because it's going to be very, very difficult. So it would be very difficult to maneuver in this market condition as price will be in a back and forth type of manner. That's how it will be delivered in price. It's not nice. Unless you are a range type of trader, then this market is for you. But for me, I don't like to trade this type of market condition because it's bad for my psychology. I like to have a swing trading approach. I like to look things ahead. So this is not giving me room to play around. So I don't like to trade this market condition. It's very difficult and frustrating for me. So it's low probability in my case. If you have a strategy that allows you to trade this type of market condition, then well done. Okay. For me, I don't want to be jack of all trades. Trading every market condition that I see, it's not worth it. So how do I define high probability trade conditions? It's when I can define one-sided market. If I'm going lower, then everything else should point to the downside. That's how I define high probability. I am not looking for any other direction. I'm primarily focused on that particular direction. And I usually find it on the daily time frame. So the daily time frame provides me with swing trading opportunities and it provides me with day trading opportunities as well. So maneuvering price action in here, it would be difficult. I have something to leave you with in terms of this price action. We first saw the return back into this particular fair value gap. I've mentioned it in the past for my June price action. We've traded inside of the fair value gap the first time in here. At the consequent enroachment, we've left highs and we are mainly focused on the candlestick bodies. So we've left the candlestick bodies just above the new week fair value gap consequent enroachment. We've went lower, supported on the daily fair value gap. I've mentioned this daily fair value gap a lot of times, and this is our main support from the daily time frame. We've used it as support for a couple of times, and the June 20th price action, check out the June price action where I was anticipating that price action will go higher from the 20th of June. So I used this fair value gap as a means of a support area to send price higher. So we've used this particular support area multiple times throughout the year. So we've had this displacement of price action going higher, and we've came back into filling in all of that inefficiencies that was caused by the 20th delivery of price action. Remember that this particular price point, it likes to spool, it likes to be in a hurry, it likes to do something very, very wild. So this type of price action is what I'm looking for, one directional. It's price action that I am chasing, basically. Well, this market condition is very difficult to maneuver, okay? However, we've came back down to fill in the fair value gap itself. And we've went higher. We closed in the 75%. It cleared off the high as well. So it's been making higher highs, trying to fill in this fair value gap. So it has had 3 attempts to fill in this fair value gap. This was the first time, this was the second time, and this is the third time that we've filled in this inefficiency. So after we fill in any inefficiency, I would expect price action to now reveal its direction. So in this case, I honestly am still bearish. However, if the market sustains above the fair value gap consequent enroachment itself, then I would be anticipating a continuation higher to then come back into this high and this high. Okay, if it stays above the new week fair value gap consequent enroachment, the 50%, that would denote order flow to the upside. And factoring in how we've supported on the daily fair value gap high, the daily fair value gap consequent enroachment, and the daily fair value gap low. So we've had no fair value gap left unfilled. We don't have any fair value gap that's unmitigated. We've traded back to all of the inefficiencies. So we would be anticipating, if we are bullish, that price is going to stay above the consequent enroachment of this wick, of this inefficiency. If it loses the fair value gap consequent enroachment, then it would confirm a bearish bias that we've only come into this fair value gap to fill it, and we've done it 3 times. So these are the 3 little crows that people like to talk about. We would use it in that manner. If it closes below the 50% of this fair value gap, then we would anticipate a continuation going lower. I was anticipating price action staying below the new week opening price because I was bearish and anticipating that this trend line effect will get revoked really quickly. But instead, what I had seen with price action is that in the 20th delivery of price action in June, we supported on the daily fair value gap low. We then went up, came back down into the consequent enroachment of that particular fair value gap. We've also filled in this fair value gap. We went higher and then lower into the daily fair value gap high. So we've used 3 of these levels from the daily time frame, this particular fair value gap. We've used the fair value gap low, we've used the consequent enroachment, which is the 50%, and we have now used the fair value gap high to send price higher into filling in this inefficiency. And also we are reaching up into the CB, the daily fair value gap that is bearish. So we have 2 sides of the marketplace. Either it can use this fair value gap to send price lower, or it can use the daily fair value gap to go higher. So there's 2 market directions that I'm seeing with this delivery of price action. So I define that as low probability trade conditions. I don't like to trade this type of market where I can define whether the market is going higher or lower at the same time. So I'm getting 2 signals at the same time, which is not good at all. But with experience, you'll get through these types of market conditions, okay? I promise you, you stick long enough, you'll get past this type of phase in your trade career. It's going to happen a lot of times. You're not always going to get the right direction or get the right analysis. It's not always going to be the case. Sometimes it's just a quiet market, just like this. So you'd have to be patient enough to wait for the market to provide you with your edge. You know, it's going to be much easier for you to trade your edge rather than to chase anything that is not of your strategy. So that's all I'm saying. It's going to be much easier for you to trade what you know rather than what you don't know. Okay, so I'm not familiar with this type of market, so I'm going to stay away from it for a little bit. I'm going to come in when everything seems easy for me to trade. So with that, I'll be looking at other markets, the real world financial markets. I noticed that there are some concepts that I cannot teach in the Riv, if you're trading currencies, that's where I'm going to be, teaching. I am introducing currencies in this YouTube channel, and hopefully enjoy the content.